Hello everyone. So good to see you all again. Credit cards are a genius invention of the business world, which is the golden egg of organizations that have a lot of money and are ready to lend money to others urgently. In the 1950s, credit cards played a major role in the development of the global economy through their captivating ability to buy first and pay later. As of 2017, approximately 1 in 5 people worldwide owned a credit card. The heart of e-commerce platforms with a credit card ownership rate of about 3.7%. But this convenience is actually a double-edged sword due to the aftershocks of COVID-19 as well as the unstable situation of the global economy. Credit debt everywhere is increasing day by day in the US alone. The total credit debt of the people has reached more than $16 trillion as a result of more than 233 million new accounts opened. This is the highest number in history, 5 times higher than the 2008 economic crisis. In Korea, credit debt is a nightmare for millions of people, especially young people. So specifically, how does the credit card business model work? Is there any way for us mortals to take advantage of them without falling into debt? Let's find out with Arts for Peace in the following analysis. Should or should not open a credit card first? There is really no exact answer to this question, and if someone boycotts credit cards, it is as extreme or wrong as a person using a credit card indiscriminately. Both objects show that they are very ignorant of how the credit system works because denying a credit card is, in fact, wasteful and costly. So why is that? First of all, we need to understand the general business model of credit cards. Credit card-related financial institutions such as banks or credit unions live on 3 main groups of revenue sources in which annual fees are the lowest part of the revenue that many banks sacrifice this source of revenue to attract users through free policies of interest-free late fees. Non-cash withdrawals are the biggest contributor to revenue. Combined, they can amount to more than 50% of sales. However, not all credit card users are subject to those fees. The third source of revenue is the commission collected from the seller, which accounts for more than 40% of the revenue. For example, when you use the card to go out to eat, shop or buy a plane ticket, the airline ticket agent, the owner of a food store, or a retail establishment, if they want to serve customers using the card, will have to bear the cost. 100 commissions for credit card issuers. If the current average fee is about 2%, they will only get $98 for a product worth $100 because the revenue coming from the third source is so large that many card broadcasters try to get as many people to use the card as possible and swipe it as often as possible by waiving fee cards and offering great promotions, and they're really cool. From that we can imagine that credit card users are spending money to help banks earn commissions. The fact that more and more people use credit cards, and more stores and agents will have to spend money. Accept payment by credit card from the amount collected from the commission fee. Credit card issuers deduct a part to cashback and promote to users, for example with 2% of the transaction fee collected. They can deduct about 0.2 to 0.5% to convert into rewards for users, and here the vortex is created. But why would retailers give money to their customers and to organizations? Finance is calculated by losing 2% of revenue on each transaction. Definitely not. If you want to collect $100, instead of setting the price at $100 to get $98, the store will raise the price to $103 so that the customer will bear the difference. If you find this strategy familiar, it is the strategy of food delivery apps. Generally speaking, in this capitalist world, it will always be the end consumer who is expected to bear all the taxes and fees charged by the intermediaries involved in the creation of the product they use. So what does this mean? This means that people who do not use credit cards are highly likely to be losing money when using services at establishments that allow credit card swiping simply. When using services at establishments that allow credit card swiping simply because credit card users will receive cashback and redeem points for rewards into valuable products, get free airline miles, and hotel discounts. And those who pay cash don't get anything even if they have to pay the full amount that the retailers raised. Therefore, if credit cards are more and more popular, the use of cash will bring more and more disadvantages. Returning to the second highest proportion of revenue is interest on late payment fees and cash withdrawal fees. In this part you will not have to pay any more if you use the card smartly and carefully. If you use as much, pay as much, and can't have an outstanding balance each month, you will not lose interest. If you pay your loan on time, there are no late fees, and if you don't use your credit card to cash out, you won't have to pay these exorbitant fees. Ideally, use the card without ever having to pay the 3 fees mentioned above because credit interest rates are often super high. And when withdrawing cash is about 5% for each withdrawal. Late fees aren't low either, and late payments in themselves can lower your credit score, but smart and careful credit card users never have to pay these 3 fees. They also did not have their credit score downgraded. They even made banks and financial institutions issue credit cards at a loss. However, knowing is one thing, but being able to do it or not is quite another. We know that saving money, going to bed early, exercising, and eating well are good. But how many people can actually do it and build it to their advantage? Therefore, financial institutions are not afraid of you using a decent credit card. What they are betting on is the lack of control of each person. When you know how to use a credit card, you have an additional source of capital to do more in the short term or hunt for rewards. Many people even have many cards opened at many different banks and manage with professional spending tracking tools to get free miles every year, free luxury hotel stays, and rewards. With technology, exploiting meals at a luxury restaurant without spending any money, but for most people, because they are provided with an easily accessible source of money along with unstable living conditions, it will lead to gradually being dependent. Depending on credit cards and living with high interest debt. Therefore, here are some small notes for you. First and most obvious, do not avoid debt. This will cause you to have a bad credit score and never get a big loan in the future. Note that large loans are very important in a capitalist society. Most will not be able to buy a house or even have a happy marriage and the ability to raise children well, or be hindered in career development without access to these large loans. If you are a typical middle-class person, you will definitely need these loans to live a decent life in a capitalist society. So don't let a small amount of credit from your youth affect your whole life. Secondly, minimizing late repayment and cash withdrawal. Interest and fees are very high. It will erode your capital and push you into an increasingly difficult situation. In many cases of force majeure, this can be an emergency option, but be careful when using emergency options and especially should not be used under normal conditions. A lot of people are confident that they will never pay these fees until life pushes them to make the choice. The third is a bit difficult, especially for young people, which is not to spend more than your income. Many studies show that owning a credit card causes people to spend more than usual. It can come from using a credit card as easy and painless as paying cash. It can come from people not thinking about numbers in the future. It can also come from the fact that places that accept cards often have higher service prices than popular services, for example. Finally, try to pay off your credit card debt and make it a priority even if you can't pay it off. Pay as much as you can because that will reduce the interest rate you have to pay if you have a $2,000 credit card debt and can only pay $500 per month. Then do that immediately, reduce your spending and pay until the card debt is gone and then start using it properly from the beginning. Don't try to wait until you have enough money to pay because it's harder to do and will result in higher interest. Don't fall into the minimum payment trap. Get as much pay as you can and try to pay off as much debt as you can to get your freedom back. Sometimes credit card debt will delay your plans, not daring to quit your job, not daring to try new things. So clearing your credit card can help you gradually regain control of your life. Credit cards are only useful to those who have mastered their power. and it has the potential to do more harm to those who are still struggling with spending and income. So the two most important and most urgent lessons for anyone. First, increasing income is the most important goal and needs to be pursued for a lifetime. Second, control your spending and thereby control your life. Remember, when you take out a loan to use, you are using your money in the future. So a fast enough growth rate and a good strategy will help you get leveraged benefits. But if you spend all your 2024 money in 2023 and get nothing in return, condolences for 2023 will be extremely painful, because that's the year you have to spend less before you can get credit because you have to pay. There will be years when you are full of money and don't know how to spend it all, and if you are not careful, there will also be years when you are in debt and fall to the bottom and feel that everything is difficult. This also seems to be the case in an economy where most of the money in the world is credit. The capitalist world borrows money from the future to stimulate growth in the present. And if things don't go right when the time to repay the debt comes due, a recession will ensue, calling for short debt cycles and long debt cycles. However, this is a topic for another video, so I won't discuss it in depth. In the end, money or credit are all resources. Using resources is not bad, but using them in the wrong way is inefficient and wasteful. That's all for this video. Please hit the like button and subscribe to our channel for more such videos.